Let's review a file that we recently closed in Queens, New York, and let's go through the specs. But before that, yesterday there was a Fed meeting and the Fed did not cut the rates, right? So the rates are unchanged because they feel like inflation and job market, both of them are stabilized. So the interest rates are still hovering around 6.16 for your 30-year conventional conforming loans. Remember, this is for your top scenarios, okay? And if you need any details, you can get in touch with us. And let's review the file that we recently closed. This is in Queens, 4 bedrooms, 4 baths here, recently renovated. It looks pretty cool, right? And let's go through the specs for that. So it was $800,000 was the purchase price. The client put down 10% down payment. Their monthly liability definitely on the lower end. They just had one credit card, and that credit card's minimum payment was $39, right? Only one borrower on the file, and the credit scores they had was 728, right? So when you're checking your credit scores from Equifax, Experian, and TransUnion, we're using the middle credit score, okay? So 728. Their household income was $133,000, and this person was a Army National Guard, so we want to thank them for their service as well. And the property taxes nearly $6,000, and home insurance nearly $1,600 there. And they used a conforming conventional loan. The interest rate they received was 5.99. They did buy down the rate a little bit, and the APR was 6.194. So let's review the CD here. So you can see that the monthly payment for their principal and interest was $4,316 here. And with escrow and their mortgage insurance, their payment is $5,098, okay? You can see the closing cost was $32,000, and we'll give you a breakdown of that. So Section A is your origination charges. This is the fees that the lender are charging. So they did buy down the rate a little bit. They paid nearly $1,600, and the underwriting fees nearly $1,200. So they paid around $2,800 in Section A. Section B, these are the services that they did not shop for. Their appraisal fees, their credit report, nearly $700 there. Then Section C is your title fees, right? This is what your title is charging, and that was around $4,500 there, okay? Then is your Section E here. These are your taxes and government fees. This is what your taxes and government fees are for the county that you're in, and that's nearly $14,000 there, okay? Prepaids, these are the services that they already paid for, including their home insurance and other fees here, prepaid interest and property taxes, $5,300 there, okay? Then you have your Section G here. This is your escrow account, right? So every time you're making a monthly payment, your escrow account is being built by that, but also the lender wants you to start off with some money there, around $2,100, 3 months of your home insurance and 4 months of your city property taxes, okay? Then you have on Section H here, you see owner's title policy optional. Always have this, always pay for this, because it will save you in the long run. Nobody can claim that this is their house because you're protected by your title insurance here. Nearly $3,000 there. So when you add everything up, you will see $32,000 was the closing cost. Also, this person paid on the contract $80,000, which was definitely on the higher end, right? We typically want you to put down maybe $10,000, $20,000 on the contract. Rest of it, you bring it to the closing table, okay? So if you're thinking about purchasing a house or have any mortgage questions, please get in touch.